Welcome to another edition of Market Action. Dave Russell here. Sorry about that. Hope everyone is doing well. We were in Las Vegas, got to meet some of you guys, and it was a great trip to Traders Expo. We turned bullish on the S&P last week. I do not think we had the opportunity to do market action at that time, but it has proceeded to break out to new highs as we expected. Pretty much we were focused on this basing pattern, and this bullish triangle. All sorts of different ways you can draw it, but essentially, seen this pattern many times. It's one of the clearest patterns, and it's one of the beautiful things about having a futures account on your options house platform, because essentially, this pattern is one of the most consistent things. When the market is in that bullish drift higher, this is one we've seen before, and basically, S&P just breaking the new highs. There's just too much money on the sidelines right now, and too little bad news. And when we look at it, I think it's interesting. The thing that really stood out, first of all, there's not a lot of options paper, not a lot of volume in general. The only alert we had so far, Mike Eaton alert on Delta Airlines. Airlines kind of taking a break today. We're seeing a little bit of a rotation, interestingly, today, away from the areas that have been good and toward the areas that have been lagging. So, for example, that means today we are seeing utility stocks, which have been terrible. They're strong. The NASDAQ, which has been mostly weak for the last month, that's actually leading today. And if we look down here on my key indexes here on my options house platform, if we actually take a look, we can see that the Russell and the transports, which have been strong, are lagging, and the NASDAQ, which has been weak, is strong. Same thing if we look at the level of the spider funds, but the utilities. Utilities are the second best today, and financials are at the bottom of the totem pole. Which is a normal kind of rotation, but the thing is, this is actually very bullish. Because when the market is in a bullish mode, what we essentially see is we basically see people wanting to just buy stuff. And they come to the market and they say, all right, well, I need to be long equities, and utilities have been lagging. And some of the big e-commerce names like the Facebooks and the Googles, they've been lagging, so I'm going to buy those. And it becomes a relative value play. And that just shows that there is money coming into this market in a broad way. And this is what it looks like. This is how the market behaves under those circumstances. That's really the only interesting option, actually. There was another call buy in Regions Financial. So Delta Airlines, let me take a look at that. So transports have been a very strong area. Delta's run pretty good. Someone's rolling some calls from the December 45 to the Jan 50s. I like this. I think when you look at this stock, I think there's a very good chance of the stock taking a stab at 50 sooner rather than later. So I think today, this weakness in the transports, this is when out-of-the-money calls can really work, and I think that give it a little bit of time. That's why I like those Jan 50s. But these are not done. This is not a time to buy them as a long-term high. One of the things I talked about in my presentation, I know some of you guys were there in Traders Expo, we kind of talked about the three phases of a move. We have the kind of chopping. This is the first chopping phase, and you get deeper pullbacks. Then you have that crazy, steady move, and then you have a kind of chopping at the top. It'll go to 50, and it'll go to 48. Go to 50, go to 48. And then maybe it stalls and reverses. It's not a time for long-time buying. But the thing is, when you get a run like this, it doesn't just die. You get chop up, chop down, chop up, chop down. And that's kind of the way to end the move ends. And I think with airlines and stuff, a name like Delta here, those $50 calls do make sense to be owning those because they have more time, give you time for that stab to happen. RF, the banks have obviously done exactly what we're talking about. And this is going to be something where they'll, if RF drops back down under 13, it'll snap back to 13.5, up, down. It'll start chopping along the top here. And it probably will have more upside. Someone's betting on that today. They're buying a $15 calls expiring in January of 2018. So they're going out in time all the way through next year, looking out to the following year. $15 calls spot right there. Almost 7,000 of them today on the Options House platform. All right, so let's take a look here at McDonald's. This is one we've been bullish on. We were just saying that we thought this was a name that was a good turnaround name. People are going to want to own it into year-end. It's been working nicely off the lows here. It's had a good run. Now they're rolling this January 110 short calls to the March 115s. So this is probably someone who just long the stock. They're using the calls as a way to just earn income, collect a dividend along the way in McDonald's. Not a super bullish trade, but also someone who does think the stock is moving higher over the longer run. just taking a look at most of the other trades are really not very directional. It's just quiet. We do have obviously Thanksgiving on Thursday, so the market's closed on Thursday. Let me actually highlight that here on my summary sheet. And then we also have a half day on Friday. I expect essentially a quiet melt higher around the holidays is one of the things we often see. I do want to point something out, though, and I don't want to overstate this, but I do think that in about 7 to 8 sessions, you're going to hear a lot of talk about the Italian referendum. This stuff in Europe is no joke. It looks exactly like Trump did, 8 months ago, and everyone said Trump's crazy, he'll never win, and then, Trump just won. Watch out for Marine Le Pen because, she's not her father. She's a good politician, and the tide is turning in that direction. So I'm not saying she's going to get elected, but there's going to be talk next year about the end of Europe and all that stuff. And the first shot we're really going to see at it is going to be December 4th. With the Italian referendum. So right now it's Thanksgiving. We're bullish strategically. We think we're going to keep melting higher for the next 3 to 5 days. But in the second half of next week, we're going to start hearing about Italy. Now, ISM is also next week along with the jobs number. So right now we just have a lot of focus on pricing in improved economic sort of story. Also today, part of today we're seeing is a rotation back toward the international, which has been lagging as well. Again, it's kind of like I said, it's bullish to see this kind of rotation where people buying the underperforming stuff. Brazil and Russia, strong. All right, please comment on Cisco, CSCO. I think Cisco's a buy here. I don't know if it goes much higher than 32, but I think right here you have a company with great options liquidity that will, I think, go back over 31. I would say in this name, something like the weekly 31s this week or next week would probably make a lot of sense to me. They're probably not very expensive. I mean, look at these calls. Look at this call spread. You can do the 30.5, 31 vertical for 13 cents. I don't know. I know it's kind of silly to think of doing a 50-cent spread, but if you pay 13 cents for a 50-cent spread, I mean, you're still looking at almost a 4-to-1 if I'm doing the math right in my head. So, I mean, I think the stock could easily go back to 31 by the end of next week. So I think this is a stock here that's at support, and it's likely to bounce. I know the earnings are not very good, but again, it's a major NASDAQ name, and it's a cyclical stock, and that I think is enough to keep it here. Another name that's fallen back to some really good support that's worth taking a look at on my list today is Molson Coors. This company, if you look across here, it's not exactly all the way down to the bottom of its range, but it's pretty close. It's been a good name with some good earnings, and I think this is one to take a look at as well. I want to remove, I had Tyson here, but I didn't mean to, I wanted to remove that. We were saying wait for Tyson to go to 60, and, well, today it went pretty far below 60. Bad earnings report. I'm not really sure what the next step in this one is. It might be actually closer down toward that 54 area. Did just want to follow up on that one because Adam was tracking it for us. All right, what do we do about Johnson & Johnson? Johnson & Johnson, I think, will kind of just gradually work higher, but it hasn't really worked well for me. I just bailed on it with a small loss. I think it's going to work higher, but I don't see anything right now. I don't see anything clear about it that's particularly good. To me, this might even drop back down to those late October lows. So, this stock I think is going to be higher in 3 to 6 months, but it might just drift a little bit lower first. This has not really been where the strength has been in terms of healthcare. I do want to point out that I think the chemical stocks, I'm just digging around, and, I bought Tronox last week, this company Trox, and Trox. This company I think is, we were talking about it when it broke out through 10. I waited for it to pull back to like 9.5, told the guys on chat I was buying it. I think this one's potentially going to crank higher. There's a lot of chemical stocks we want to look at right now. I have not looked at this one much. It's a Brazilian chemical stock Braskem. But look at this pullback to the 50-day moving average. Now, again, we're looking for stuff that's going to price in cyclical growth, stuff that's got pricing power, that's raising the prices for products. Look at this name. I mean, this was a really, I mean, technically this is a tremendous opportunity, I think. Now, I don't know much about this company, and it's a Brazilian company. There's a lot of strange stuff, but looking at it purely from a technical point of view, and the macro thing, the pricing thing is there, the economic cyclicality is there, and the technicals are there. So I'd ask you guys to dig a little bit more, but I think in this whole chemical space, look at LyondellBasell, LYB, for example. This one's getting ready to break out through 84, 85 area. One of the other ones that we've started, this one has been struggling but had a good earnings report, Platform Specialty. Westlake is one of the ones that is cranking higher today. I just want to point this out because the chemicals area, I think, has got some real opportunity. And we've been talking about this for a little while now. What do I think about CCI? All right, so CCI, I sold my shares at the time. We did an update. I think this stock is going to just chop around here, and I don't think it's going to go a whole lot higher. So let's see. We have the Jan 85 calls. I think I think with those Jan calls, I think the stock could easily have another stab higher. I mean, near term, it could easily sit here for a week or two. But this is an awesome company, and it got totally hammered by the whole macro thing with interest rates. But I think at this point in time, look, I think that it has another leg higher, and I think interest rates are still going to keep going up. My target, and we have this in our morning note, is we're looking for these highs from middle 2015. I think we're going to see those before we stop, but it's not going to be a straight line. I mean, you think about it, it can easily have a couple of weeks of weakness, and I think that's going to be positive for the REITs. I would tend to think now, if anything, that I think the stock will move higher by Jan, and I think that this stock could easily be at 90 by that January expiration. So it's not going to be a lot of fun. It's going to be kind of chopping around, but I think this stock is still going to move higher. I sold it myself just because I bought it under 80 and I had it at like 85 and a half, and I'm like, well, I have to sell that. But for those calls, I think there's still more upside. So Adam updated with like a 50-60% gain in it, and we're holding the other half in the premium alerts. CRM had good earnings. It's been selling. What do I think? I don't know. I don't like CRM anymore. I think there's something wrong with this stock. If you look at the earnings, I don't know. I think that they're losing market share or something. The stock just is not traded well. It's insanely expensive, and maybe they're not losing market share. Maybe they're just too expensive for this market right now. I don't know exactly what it is, but this stock to me looks like it just needs to consolidate longer. I think this stock could have, it could do some ugly stuff for a while. It could go back down to like 60, chop around. This is not like a nice, sane, this isn't like, a nice, pleasant stock that, that does pleasant things. It's really volatile, and when it's bad, it's really horrible. So I think this stock right now is, I don't see any. I would say it's got to break out through that high. If you look at it, we've got this pattern here. This thing. And I think if you want to see it, to be honest, I think it's got to get through the 80s here. It's got to get up through this kind of somewhere around these highs from August and July. And it could do it. But it might also just take a beating in the meantime. So it's got to get through 83. I think it's trying to turn more bullish. The 50 days under the 200-day moving average. The 100 days falling. I think it's going to chop around here, and the question is really, what's the next incremental set of news? So I think it has a range here between 70 and 83, and it might just have more wood to chop in the meantime. When you get all these moving averages on top of each other, you can just get a lot of drifting around, and this is, I think, range bound. So I think CRM has a 70 to 83 range, and we should watch that. One of the other things I did last week that I told people about on chat was I bought PayPal. And, PayPal was one that we were saying all along, it's going to be an agonizing consolidation. We were saying it this whole period, right? And then we got the breakout, then we pulled back, and then I bought it. We told people about it in chat. This is the thing I think right now that, CRM could do this. And this is where CRM is right now. It's like right here, somewhere around here, okay? So, it's just not lined up for a clear rally yet. And the thing is, if something goes bad, then it's going to, tank, right? And people looking at PayPal, if one or two things is going bad, this stock would have gone back down to, closer to 30. And I think that's the thing with CRM right now. People are waiting for some kind of clarity on it. And so I think right now it's range-bound, and you're better to wait for it to probe the lows and make sure nothing else kind of bad happens with it. What do I think? With the lagged rotation theme, what do I think about AT&T and Verizon? Well, we were recommending AT&T and Verizon last week, and I think they've kind of run a bit. So I would actually be a little bit, I don't know about these. These are probably going to continue higher, though. I think Verizon, I think now this has got amazing option liquidity. Stuff like this, something like the 49.50 vertical in a name like Verizon, also targeting next week. I would actually agree with that. Look at how inexpensive something like those 49 calls are, and those go through the end of next week. I think actually you're right. I agree with that, and I think these stocks are going to have another stab higher. Again, now these are stocks where the equity is a waste of your time, but with the calls, I think you can do amazing stuff with them. Let's take a look at AT&T. Speaking of these telecom stocks, we have put selling today in FTR Frontier, which we were also citing on this pullback down to these lows. I think we have an open position in Frontier, in fact, for our premium service. But all of these were at really major, long-term lows. And, so, I think AT&T here, I think both of these are going to move back up toward the kind of September lows on AT&T. I'd say Verizon goes to 49 or 50. And AT&T goes to I think it goes back up here to what is this, 39 and a half. I agree. These are ones when the options, I think, can really do good things for you. Bank options, Bank of America and Citi. I'm using a different computer and it's doing. Give me a second here. All right. Putting on Bank of America and Citi. Are these in rotation toward the downside or upside? Well, I think they stall. The thing you got to remember about these banks is these things are, there's nothing bearish. Don't buy puts in something like this. It's just throwing money out the window. But it's also, if you made a ton of money on the stock, then buy puts for protection. But these are going higher. They're going to keep going up. It doesn't mean you buy them here and now because they could chop around. But there's nothing downside headed in these names. So I don't think, these are going to, they could. Now, I can see the case for some kind of pullback in them. Here's the thing. You see something like this, and it could just break out and go a little bit higher and then die. And the problem is, I don't want to just say that you want to buy them because I don't think you do. I think they could stall here. They could have modest pullbacks. But from a risk-reward point of view, buying puts on this looking to make money, I think, is not at all the right way to think. Now's the time, if you made money in the stock, sell calls, buy puts, do a collar, something like that. If you didn't make money on it, then walk. Don't touch it. That's not where you want to look. Now you want to be looking toward things like BHP, which I think here is a nice pullback. I think it's stock. Look at this. This is, I think, a great entry in BHP right here. Rio, similar. these inflationary trades, the global, seeing the global come back today, these names are pretty awesome in these pullbacks. Here's another stock that this doesn't trade well. This is more of an investment thesis, but a stock like Universal Display, this is a company that is a long-term growth name that seems to be getting its business in order. This is one to just kind of watch. I mean, it could drop back down to 55 or something, but as a long-term name, their last earnings were good, and this company is one that I think over the long run has a lot of potential. So I did want to just mention this as one. I nibbled a little bit of it today. I don't really, have a whole lot of thought about it. I'm not going to overthink it or watch it too much. It's a really volatile, annoying stock. But the thing is that as an investment, this is the kind of stock, though, that you wake up and it's at like $80 and you find out that Google bought them or something like that, or that something amazing happens. This is an investment, sort of long-term growth name. But this stock has been coming back to life. It's a long-term secular growth story. They do this highly efficient liquid crystal displays that seem to be in an organic growth phase, and they have a bunch of new products coming out next year. Like I said, this is an investment, and it's a very volatile name. Another name that's interesting that has some good earnings and that seems to be surviving after a long period of getting seasoned is GoGo. This had a big rally. It pulled back to these levels. We've seen this pattern time and time again, and it has actually worked pretty well. It actually is what Radian did a while back. We recommended Radian back here in June when it went back and retested that old low. So if you look at a stock that has been it's been bottoming, the 200-day is falling. These stocks don't rally straight up through that falling through 200-day. The 50 is under the 200-day. That's not a good sequence of moving averages. And we talked about that in our presentation, like the sequence of moving averages. If the 50 days under the 200-day, you seldom see a rally. But now the 50 is over the 200-day, excuse me, making a slightly higher low. So GoGo has had good earnings. They also have new products coming online. It's another one that is an investment. This is something where, it's probably worth buying a little bit of this stock and then seeing what happens. I mean, this is the kind of company that it could easily, rally 40, 50% from here, in my opinion. It's coming off lows. It's had good earnings. The market is bullish. They seem to have a positive story going into next year. And that's one of the things we're going to start looking for. We're going to start looking for the companies that are positive stories in the next year. And to me, GoGo and OLED are both in that list. Another name that's in energy that we've been talking about that's been consolidating, but I think Whiting Petroleum. I mean, this is just also, look at how tight these moving averages are. This thing could just ratchet higher. This is one to me where it makes sense to do something like buy. Now, the thing is, we have the OPEC meeting coming up. There's an interesting aspect to Trump in terms of oil, which is if he puts the sanctions back on Iran, then that's bullish for oil. So just something to think about. I'm very much with oil right now. It's all based on political risk as opposed to, realities of the market. And it seems right now that we're going to squeeze into that November 30th meeting of OPEC. People are seeing, they're pricing in a deal that may or may not happen, but for now, that's what the market is looking toward. A name like Whiting Petroleum is extremely leveraged and has a ton of short interest. The moving averages are very close together. I mean, a stock like this, to me, this stock could, I think, run back over 13 or 14. And I think something like, even something like some March, like 13 or 14, these are not terribly expensive when you really think about it. So I do want to point this one out because I think this stock could run its way back up there. I think and it could also do something ludicrous. That's the thing. I mean, a stock like this could go up a lot more because it has so much leverage and so much short interest. So I think a name like Whiting here, buying some kind of out-of-the-money calls in it or an out-of-the-money call spread could make a lot of sense. What do I think about Cemex? Well, I was too early in it, but I still think it's a good name. I don't know. I'm not really sure, though. This currency stuff is, in my opinion, too confusing. And I don't know. I think a name like Cemex here is I think it's got too much risk in it. And, from what I can tell, Trump keeps saying he's going to build a wall with Mexico. Whatever you think about it politically or anything else, I mean, this guy is going to crush the American political establishment, from what I can tell. They keep underestimating him, and I just saw now a poll on MarketWatch saying his popularity is going up. So I think right now you don't want to be on the wrong side of this steamroller yet, and I think that Cemex seems to be that. I think there's just too much political risk in this name, and, I think it should be avoided. It was a pullback that I liked at first, but as I look at the bigger picture here, I think that it could be a good entry, but it's too complicated, in my opinion, to assess the risk, and I think this stock is going to suffer as a result. So I would avoid things involving Mexico, things that are clearly going to be a political risk. I mean, Jeff Sessions, Attorney General. I mean, Trump is pushing forward. Whatever you think about him politically, he's pushing forward with what he said he's going to do. And, I personally think about thing with the wall, what they're going to do is Trump's going to go to Mexico, he's going to renegotiate NAFTA, and then he's going to say, oh, okay, we're not going to do the wall. He's going to retreat on the wall. From a political point of view, he's created this obvious red herring that he can then surrender on, but he can win on all these other fronts. So he's going to keep beating that wall thing because he's going to use that as a weapon against the Mexicans in negotiations. Then he will concede that ground, but then he'll win on other stuff. And the thing is, as long as we keep hearing this, I think it's just going to be a problem for these stocks. So I don't know. I think messing with this bigger macro trade is just a very risky thing. So I don't think it's a particularly good idea to mess with Cemex. What do I think about Ben, as in Franklin Resources? This has call buying. Let's take a look over here on the option monthly premium activity log. We had the April 45 calls bought. Now, this is also something where I think this company had some overseas assets. This is a bullish ascending triangle. I think this is exactly one where now, it's kind of the opposite of Cemex. This is one that is going to benefit from the political backdrop. It's got a bullish triangle here. I think it's going to break out. I think it still goes higher. So, you can see, wow, that's a big move. But then you look at the long term, the stock's gone nowhere. You have a company that is basically a mutual fund operator. We have a new bull market, or a sustained bull market, new generation of people entering the market. A company like this, at the end of the day, I think all these mutual fund stocks, they're going to have a comeback at a certain point. And this one's had the paper. It has a bullish ending triangle, and I think this one will continue higher. So I said what I thought about Whiting. I think out-of-the-money calls make a lot of sense in Whiting. We've been talking about this one for a while, and it is up since then. Do I think of GoPro? What do I think about GoPro shorting it? I don't think it's a great idea to be shorting anything here. This market's just too bullish. I don't know. I think it's a crowded trade, and a company like this, they can. I think if anything, there's more risk that there's some kind of positive surprise in it. So companies have just not really been breaking down. I think if you do want to short it, let it snap back up to 13 or 14. What's this low from October? 13. Let it snap back to the upside. That's when you want to short it. The 50-day is still over the 200-day. I don't think it's quite ready to sell off yet. I think the level, let's take a look here at the 3-month chart on the Options House platform with daily candles, and we can see by drawing a flat line right here, somewhere along here, these areas, between 12.5 and 13.5. That's where you want to drop the hammer, in my opinion. Let it come back up into you, I think. Please comment on CBI. Well, I added to my CBI today. Very bullish on this name. And let me tell you exactly what I did, because I used the Options House, this 3-day platform, this 3-day chart. I bought it right there. I bought it at 31.5, pretty close to the low. When I have these stocks, I keep a list of stocks I'm trying to add. This is one on my list because I only bought a small position to begin. I look at that 3-day chart, and I just saw there a nice pullback to the old zone, and I just bought it right around there. So I like this name. I think it's just going to break higher. But again, if you look at the daily chart, it's not massively bullish. I mean, it's got obviously a nice turn here, but you got to be careful buying it at the top of the range. I think odds favor a break to the upside in it. In general, I do not like buying stocks like this, but I think you have to deal with the market that you're in, and I believe we have a real shift here. Look at this level from late June. I think we're going to break out and scream higher here. I think the macro trade is too favorable for the industrials right now and these construction companies. And also had a good earnings report, and it came off. There's a level here at 26 that it was a real, it's been hard for me to buy these things coming off lows. I'll be honest. It goes against a lot of my, historical, tendencies. But you have to trade what you have, and I think right now this is a stock that when you look at it, it's coming off some long-term lows with a favorable macro backdrop. So I think it goes higher. I don't know what to do with it right now. I think it's one where you want to have that 3-day chart every morning and look at it and say, where would I buy this? And I think right now, small chops to the downside are going to be the way to play it. If it breaks up through this high, I think that's really the thing here. This stock is on the verge of a breakout, and I think it's going to break out. So I think if it gets like through 33, or let's see, what was this high? This is going to be one where there is going to be a point to chase it. I say if it goes through like 33, I think you want to buy longer dated calls when they're earnings. Earnings are in February. See, this company does have weeklies. I don't have an idea for a good strategy, but I think if it breaks 33, that it could have another leg higher. So I do like Chicago Bridge and Iron. Do I think Microsoft goes to 63 in the next 2 weeks? MSFG. Probably. Yeah, no, I think so. What do you think about EEM? Well, it's oversold now, and it's trying to kind of bounce from there. I don't like it from a macro point of view. Oil is okay, but this is essentially a weak dollar instrument, and the dollar is not weak anymore. So I think EEM is kind of a loser ETF at this point. I'd rather see something like EWZ play the countries. If you like oil, play those countries. Russia has been really strong recently. It's breaking out. It's probably the best country right now. So I think you want to. The problem is I don't know about China. There's been something of a rotation away from it here. It's interesting if you really look at this because look at the SXI here. This is holding these levels from July. This is actually probably a time to think about coming back to China. Take a look at some of these names if you'll forget about, like China Unicom. Or here's one that no one ever talks about, Aluminum Corp of China. Yeah, look, it doesn't trade any shares. I shouldn't even be showing it. I'm sorry. I'm just looking around because I think right now, see, these don't trade very much. I think EEM is kind of a dumb product, to be honest, at this point in time. I think it's better to look at the individual countries. Canada has been very strong as well, and I think Canada and Russia are the places to look. Maybe Brazil, but I think EEM is at this point going to be kind of an unclear trade. It's all about moving averages for me. Well, that's not true. I'm into levels. I'm into MACD. And also my most important thing is the relative strength. So it's not really all about moving averages for me. Relative strength in different sectors is one of the main things I look at. What do I think about CLR? It's in a bullish triangle, but it really hasn't broken out yet. And it's very possible that this turns into not a bullish triangle, but an equilateral triangle. So we might actually see this squeeze here, kind of between 46 and 49. Let me do this. Well, I'm sorry, 54, I should say. We might see this. Yeah, I think it's bullish, but the thing is like it hasn't broken out. I think it's gonna break out, but I think you could see it under 50 again. It could have a stab down to 50 and then launch higher. So I think from a risk reward point of view, this is not a very good setup right now. When that 20-day is under the 30-day, you're often going to get a drag back lower. I think it's overbought in the near term. And I think if you wait for it to come back down to like 50, 51, you'll be in a better place. What do I think about Coca-Cola? Well, we said we thought Coca-Cola was up for a nice bounce off of like the 41 area. I still think that's true. I think this is a key level and it's going to bounce off of it. I do like it. I liked it at the time just because the options are cheap, and I still think it's probably going to do that. Even with your best audio systems, there's a 2 to 7 second delay between the audio and video. I'm really sorry. Let me try. I'll try to be more specific because you're saying like using ambiguous words like this and here are confusing, so I will try not to do that. Am I still bearish on rig? Well, these have been very strong recently, these like the oil servicers and the ocean drillers. No. And if you look at my morning note now, we've been doing this every day when we actually analyze the groups and sectors, and we actually had cited ocean shipping, what we said, energy has bounced in the last 2 weeks. High beta groups like oil servicers and wildcatters have led the move. So for me, if oil were to break down, then this is in tough shape. But it looks to me like the market is pricing in more of a renaissance of North American production. And we almost seem to be pricing in at this point, increased activity back in the Gulf of Mexico. So some of these companies that have been so bad for so long might actually bounce, like Diamond Offshore and Rig and SCO. So I think this is actually something here where these might actually be ready to turn. So I want to actually take a look at these if anything it bounces. These might bounce. Do I think FedEx will continue to trend higher? We did an alert on this one, and we said that FedEx had about as close to a perfect chart as a stock can have. Yeah, I think this is just a clear move. I think it will continue higher. Given the kind of weakness we see today in transports, there might be another day or two here of transports lagging a little bit. Trying to think of what would be the right level. I think it'll pull back under 180. Really overbought here. I've found in general, if you wait for stocks to pull back to like their 100-hour moving average, which is pretty similar to the, I'm trying to think of what there's a gray line here. When these stocks are in these kind of uptrends, very often, that 100-hour will be a useful one, and it's roughly the 20-day moving average. As you see right there is right around 180. So I think let it pull back to 180. I think it's going to go higher, but in terms of entering it, it's probably going to just keep going up. When stocks make new highs like this, they usually don't pull back very much at all. I think it is going to keep going higher. I don't know a good thing to do with it per se, but I think, yes, it continues higher for the next few weeks. What do I think about Facebook? Is it a long or a short here? Well, I don't think you want to be short any major stock like Facebook under any circumstances. I personally think Facebook's going to lag for a while. Like I said, there's a shift towards cyclical growth away from secular growth. And this company, I mean, God knows what's really going on with their ads. There's been all these allegations that they've been cooking the books on the ads. I think that's enough. I mean, if you're going to trade at like 8 million times earnings, you've got to be perfect. And this is a slowing growth name now. And now the narrative is out there slowing growth. And if there's some kind of bigger problems with their ads, having inflated viewership, I don't know. So I think this stock is one that I don't think you want to be short it, but I don't think it's going to go much over 115. I think it's going to get stuck under that gap. We had that big engulfing candle back on that day, which I think was the 10th. It was like 2 days after the election, this on November 10th. So I think the stock is going to stay below 125. So I would say that if you want to short Facebook, give it another day or two up. Let it get up there. Look at the 10-day chart here. You know, let it kind of get up there and just kind of really stall, and then, you know, break back. It'll probably go up over 124, and then as it comes back under 124, you'd want to get short, something like that. That's what I would tend to think. But it's going, I think there's a very strong chance that it goes over 124 before it goes any lower. What do I think about Mylan for the short term? Healthcare has just been a dud overall. Short term, it could go back to 34. There's nothing good about this one right now. Short term, I think there's a pretty good risk it goes back to the lows. With the rapid rise in the U.S. dollar, do you think a short-term pullback is in order? Maybe a put spread with UUP? No, I don't think so. I don't believe in betting against short-term momentum really ever. So I think that there's a good chance the dollar index breaks out. And like I said, with this Italian thing coming up on December 4th, I don't think it makes any sense right now because I think that the risk, I think, is clearly weakening in the international situation. This thing in South Korea, I don't know what's going on there, but I mean, that's not good. And there are several other things out there. So I think right now the global picture, you know, we review it in our morning strategy note. We have a section here about the international theme. We've been saying that global risk has increased. So when you have the thing with, you know, Sarkozy getting knocked out of the election, of the primaries in France, and you have, there's a lot of bad things happening globally. It's not to say it's going to knock down the market, but it's something that I think is going to keep support under UUP. So no, I don't think you want to be short the dollar index. What do I think about pizza? All right, and Domino's. So we talk about Papa John's here. I think these are both going to just continue higher. These are both, I like these restaurant stocks. They're not like, they don't trade very well, but I think these companies are clear winners here, and they seem to be in the right place. I would say, you know, Papa John's pull back to 83 to like 80. Look at the highs from mid-October in PZZA. You have a high here around 81.5. If this one goes to 81.5, I think it's a buy. Am I still bullish on Apple? I don't know when I was bullish on Apple. I am not bullish on Apple. I do think that I said that I thought it was going to rebound from here. So I think this stock to me is very much range bound. I think it's going to be between 106 and 118. So yeah, I mean, it bounced where I expected it to. But this company's got a lot of bad news. I think it can still happen. And people were, you know, they keep cutting the estimates on like margins and stuff. I think Bernstein did today. So I think the real thing in Apple is it's going to be between 106 and 118, but I think with longer term downside risk. RSI for what time period? I don't use RSI. I'm not sure what your question is. If you want to kind of rephrase that, I'll try to address it. What do I think about gold miners in the midterm? I think they could probably have something of a bounce, just because they've been hammered so hard. So I think right here, I think there's a good chance that the GDX bounces towards, say, 23, 24. before it continues lower. So if you're looking for a short bounce, a very liquid instrument, I would say something like the 22, 23 vertical, for next week. We have jobs numbers next week, and even though they're probably going to be strong, we've priced in a lot of hawkishness in the last 3 weeks. I mean, we have this transformative move in the bond prices, and I think this has been a huge, just crushing beat down for the gold miners. So this is a dollar wide, and it's 32 cents if you do the 22, 23 vertical. Let me just see. Let's look at the Friday, December 2nd. You know what I would say here? Italy, right? So the December 2nd is Jobs Day, and then December 4th is Italian Referendum Day. So you know what? The risk reward, in my opinion, is now, if anything, and look, I think gold miners are not a good place to be, but you're asking intermediate term. I'm saying intermediate term, I think 2 to 3 weeks you could see a bounce in the gold miners. I did something like the GDX 22, 23 vertical spread for 32 cents. It's a 3-to-1 risk reward. Technically alone, it's due for a bounce. And then you throw in the idea that, oh my God, Italy, like Renzi's going to, he already said he's going to step down. To me right now, the risk reward is almost so obvious with the Italian thing. This guy put his neck on the guillotine. He said, I dare you to pull the hammer, to pull the rope and cut my head off. And basically the Italians are like, that sounds like a great idea. Let's do it. So, I don't know what that guy's thinking, but he basically said, I'm going to put the referendum out there and I'm going to quit. If Italy loses Renzi, it's not, people are going to freak out. And I think something like GDX is a way to play that. So, I would just say that from intermediate point of view, I'm not trying to be bearish now. I still think the S&P is going to move higher this week, but that thing is popping up. So I would say right now, you look at this pullback in GDX to these levels, that would make sense to me if that's what you're thinking. What do I think of Dow Chemical? I don't have a whole lot more time. I wish I could address all your questions, but I think I'm going to run out of time. This is very similar to other chemical stocks. They're all on the verge of a breakout. And I think if it goes through 55, it's going to just catapult higher. I would wait for it to break 55 and then do something like buy, the calls that are 2 to 4 weeks out and look for gamma and look for it to accelerate higher. Given the overall backdrop and just the bullishness in the market, I think something like the 55 calls on this right now, I think it's going to work its way back up to at least 55. I think the next week, those 55 to 30 cents, come on. Those could quadruple. Because this stock could just go up to 56, and those calls will be worth over $1. So I think this stock is bullish, and I think this is one that's best played with calls. We have excellent liquidity in this name, and I like this. eBay. I haven't looked at this stock in a while. This is looking good to me. I think this one will probably turn higher. Not a big fan of this e-commerce sector, but it'll probably work its way back up to 31 or 32. I don't know much beyond that. I don't really know if this company is that great of a company. Pretty sure they had a bad earnings report last time. Let's take a look over here in Research Lab. They had bad guidance. I think it's bad. They had bad guidance going into the holidays. So I think that people, I don't think that, that's a bad thing to see. So I don't think it's got a lot of upside. I like PayPal, though. I think PayPal is a whole different ball of wax, and I think this is the one that makes more sense right here. Cheniere Energy, LNG. Well, this one is, they'll probably move its way back up to 55. This is probably going to go back to 55. No, 45, I'm sorry. Cheniere goes to 45, I think. I think that's your target on it, but I do like it. As a bounce to that. All right. I'm sorry. I'm not going to be able to address the other questions. I'm just running out of time. Let me just quickly mention some of the other things we saw today. There was a little bit of, wait a second. I think Ulta Salon, let me take a look over here. I think I wrote the wrong thing. Ulta Salon had some paper. Those calls were sold. I wrote the wrong thing on my list. They're selling the calls at Ulta Salon. They were selling puts in Frontier. There was some put selling in Zyopharm. They sold the December 6 puts. Texas Instruments had the 76.5 calls sold expiring in December. Probably some of these long shares. There's a bullish call spread in TripAdvisors. They were buying the 52.5 in December, selling the 55, looking for it to go back up and just touch back up into that gap a little, not even. Also, Sealy Tempur-Pedic, or whatever this company is called. They've changed their names a lot. Tempur-Sealy. The January 60-50 bearish put spread was bought. It's probably a hedge. This is a company we liked at the lows. Took a little bit of time to work, but it did gap higher on good earnings. They're just hedging it on a pullback back down to 50. I personally would tend to think this stock has more upside into the holidays. Good earnings, consumer discretionary has been strong. So just looking here at a few other things. Stanley Fischer, it's interesting, but I think the people at the Fed, to be honest, and I'm not trying to be too political, but I think they wanted someone like Trump because it's like they keep saying, we can't carry the economy anymore. We need the fiscal side, and now they're going to get the fiscal stimulus side. So Fisher, these guys, the Doves have gone completely underground. Lael Brainerd last week, she basically came out and she talked about, she was like reading out of the phone book, nothing to say about monetary policy. And now Fisher, he used to be a Dove, now he thinks infrastructure spending is great. There was weak data from Japan and Taiwan, and Italy cut its GDP forecast. So anyway, I think that the chemicals, metals, that's going to be some of the things. And the metals that I think are most interesting are BHP Billiton and Rio. But I think right now the reflationary trade still is going to have some traction. We had job numbers last week. I was doing, I was not doing market action because I was in Vegas, but those jobless claims were incredible. 235, that was the lowest since I think 1973. Good numbers all around. And I think that, I've been saying all along, this economy was like a tree that fell over and it was lying on the ground and you keep kicking it and it can't fall down anymore. But now it's going to get up and start growing again. And, I think that's where we stand. And I think that, we're going to continue to see money coming into things that are cyclical, people looking for value. The semiconductors have been extremely strong, and I think are going to be interesting to keep looking toward. I think we're going to probably in the near term see a little bit more strength in some of the NASDAQ names. I think people are going to keep looking for that. So anyway, I hope everyone has a great and profitable end of the trading day. We'll be back tomorrow. And remember, if you don't get my morning strategy note you would like to, you can please email me, David@russell@optionmonster.com. Take care, folks. We'll be back tomorrow.